Hi, I'm the mortgage guy, Tim Whitmire. I often talk about preparing for a home purchase well in advance, ideally 6 to 12 months prior to purchasing your home. There are many reasons to do this. One is I can help you develop a game plan on how much to save for a down payment or what debts to pay down prior to your purchase to help position you to qualify for the most attractive loan program for your needs. Two, it gives you time to work on your credit to maximize your credit score to help obtain the best terms available. Even if you think you have excellent credit, monitoring it ahead of time gives you the needed time and ability to address any issues you may not be aware of and that may not even be accurate. And three is I can help you avoid making mistakes that can derail your home purchase plans. The focus of this video is to inform you about how your employment and income can affect your ability to purchase a home. Mortgage lenders look for job stability. We focus on your employment over the last 2 years and to try to determine the likelihood of your income continuing over the next 3 years. It is incredibly important to not make any job changes or changes to your income structure prior to or during the loan process. The following changes can jeopardize your ability to purchase a home. One, changing from a salary position to a commissions position. Even if you earn more income as a result of the change, we can only use commission income after you have a 2-year history of receiving it. We must also average commission income over a 2-year period. Two, going from a W-2 employee to a 1099 type of employee / contractor or self-employed. Even if you work for the same company and have the exact same job responsibilities, making a change from a W-2 employee to a 1099 type of employee requires a 2-year history prior to being able to use that income. Three, changing jobs. If you change employers and stay within the same field, have no employment gaps, and earn a salary, we may only need 30 days of income with the new employer. However, if you are entering a new field, have any gaps in your employment, or change the structure of how you are paid, more time will be needed prior to being able to use your income to qualify. And four, starting a business. Lenders need a 2-year history prior to being able to use any sort of self-employed income to qualify. It is also important for business owners to understand that mortgage lenders only use taxable income off the federal tax returns for qualifying. And five, retiring. Retiring right before making a home purchase can present challenges when acquiring loan approval. Mortgage lenders must be able to clearly document your new source of income and show receipt of retirement income prior to closing. These are only a few examples of employment and income changes that can affect your ability to get loan approval for a mortgage. Even if it benefits you financially, it is incredibly important to fully disclose and discuss all changes with me ahead of time prior to making any changes to your employment or the source of your income. Thankfully, at First Integrity Mortgage, we have special programs to help buyers or borrowers who may not fit all the traditional employment and income requirements set by the secondary market with Fannie Mae, Freddie Mac, VA, and FHA. I've been originating mortgages since 2001. My experience and my knowledge can help you avoid making mistakes when preparing to purchase your home. Let's get started. Call me today, 314-402-8184. I would love to help you.